What's going on, everyone? It is Wednesday, June 17th, around noon. So I'm just going to get right into it. Let's speak about Bitcoin. A couple things happening this morning that might be switching around our midterm trend just a bit. So here on the daily, I just want to quickly point out that um, we are pretty much breaking down today. From this morning, I know that we got a test towards the 95.50, 95.60 area, but we weren't able to get to our 9600 high from yesterday. So definitely not the best sign, not exactly what we're looking for, but let's go ahead and dig a little bit deeper. So on the daily here, I'm just going to bring out some moving averages just so we could get a quick understanding of what might be going on. So you can see that really quickly. I have the teal up at the top. That's from the top to the bottom. We have 21, 55, 100 all EMAs, and then we have our 200 simple moving average in the yellow and our 100 simple moving average in the orange there. So top to bottom. So I just want to point out, since we've really broken uh, back up into the 6,000 area, 7,000 area or so, we've been pretty much using the 21 exponential right there to, sorry about that. We've been pretty much using our 21 exponential there to kind of base off of and determine what the current momentum for the trend is. And you can see from this point forward here on 22nd of April or so, we really broke up away from the 21 and the 55. The 55 had been holding us down for a couple weeks or so. And we got this major candle to break us through both of those areas. And you can see from that point on, we've kind of been using the 21 here as like a general, general bounce point or so, or a close point. So you can see where traders settled up here. I believe the 11th and 10th of May or so. We ended up using this exact 21 EMA area as our closing support or our settling area right there, and we got a major bounce off of that. You can see from that point, though, we have been swimming around the 21 and 55, and you can see that current day. Actually, really quickly, let me point out, last time we broke below the 21 right here, which was the 21st of May. We swam around for a little bit. We got our solid close below, and open and close below here. And then you could see really we spent a couple days in that kind of consolidation area, making higher lows and higher highs. And then we quickly broke up out of that after just a few days of being below the 21. Whereas you can see currently we have been below the 21 for about 5 days now. I believe 4 or 5 days now. We've gotten opens and closes below, and we haven't been showing really enough strength, I believe, to push us back up to the 9,900 area. And that's really what we'd be looking for to kind of invalidate this this area here, which is looking pretty negative simply because we have our demand line here and we're kind of grinding against the demand line. That's never really a positive thing, especially when you're below the 21. You're kind of getting like a coiling below the 21 and between your demand line. We also have we also have the 55 right down there. So this isn't really the best sign. I kind of can see this breaking down again towards the 9,000 area, which let's go into the 4-hour to speak about that. And let me point out we do have the 100 simple here right around 9,600 or so, which gave us multiple points of resistance yesterday. And then you can see this morning we weren't even able to make it up to that point. So this was really a major determining factor, I believe, this morning just for the midterm trend or so. And what I mean by that is really I can see, because we broke this line now, I'm really looking for one major sign here to kind of give me some more confidence for maybe pushing back up towards the 9,000, 10,000 area. And that would really be if we can come back down. You can see we are currently breaking down. So if we can come back down to this 9100 area, which again is the 382, which we'll speak about a little bit more later in the video, and then maybe get a solid, quick, powerful move back up towards this side that pretty much is kind of necessary to uphold the trend. If I don't see something like that happen, especially really a move back up 9600, a wick back up would be alright, but a close 4 hour and above would really be preferable to show us that we might have enough strength to make it back up to that 10,000 area or so. But until we do that, the current short-term trend is definitely going to be a bit more leaning towards the negative side. So if we don't get this bounce back up from 382, definitely leaning a bit more towards the bearish side. And let me explain a little bit why, a little bit further into that why I'm saying that. So you can see that from since our impulse out of the 7700 area, we've been in this consolidation pattern really since the beginning of May or so. So had a solid month and a half so far in this consolidation. And you can see that every time we broke down to create a low or a pivot low, you can see that initially we held around the 618 area. We did break it a couple times, but we had some major buying, some major wicks over here, which really helped us get back up to our upper range there. And you can see when we broke down a couple weeks ago, we used the 0.5 area as support there, and we're able to get a push off of that area. And here we are this week. We have a test of the 382. We had one test here, about a week ago on the 11th of June, and we had our second test just a couple of days ago. The second test, it's not it's not the best sign. We're really looking for a quick move up and out of this region when we're looking for Fibonacci support. We really don't want to hang around those areas for too long. We'd much rather see quick bounces off of that area to show that there was a lot of resting liquidity or buy orders in that area ready to enter the market. So you can see we got a decent chunk, I believe on the 15th or so. We got a nice 6% move to the upside or so. But it's really the follow-through or follow-up action, price action, that is a little bit less convincing than the impulse up. And the reason for that, again, is really that we're starting to roll over up in this area here. We haven't been able to wick, or we haven't even really been able to get above yesterday's highs around 9,600. So that's really what's making me think that we might head back down towards this 382 area one more time, just for a test. And again, what we'd really be looking for, what I'd be looking for in that area, is some strong buying, a solid rejection of this 382 area, and to get us really quickly back above 9,500 or so. If we can't get that kind of a reaction off that point, then I do believe that we'd be heading more towards a little bit of a bearish case for our midterm trend. And what I mean by that is really just separating from this uptrend since really our major breakdown in early March, and getting what we'd consider maybe a pullback or some type of a back test of a prior area, a major prior area of support. So if we are unable to hold that 9,000 area, again, this is if we come back down to this 9,000 area, which I do want to say on the daily here, the 55 is lining up right around this point where really I'd be looking for that reaction. So if we can't get that reaction off that 21 there, I do believe that we'll probably pretty quickly fall to the 8,700 area, but I do not expect that area to hold. Really, what I would be looking for if we break through this 21, with some decent volume and a solid close below that, maybe on a 4 hour or above. I'd really be looking for a move back down to the 618 area here, around 8,200 or so. And you can see that we have our 200 simple supporting us right around that area. And the 200 simple is a pretty reliable means of support. You can see in this area here, we use we did have them in a definitely a different formation, but you can see that we did use that area as support for a quick bounce back to the upside before continuing this trend down. So if we do end up having that move down to the 618, I would be expecting somewhat of a bounce back up, but that would really be decision time for Bitcoin. I don't think if we are able to make it back to the 8,200 area, I don't think that we're going to continue continue price action to the upside just yet. I think that if we get to the 618 area, we'll probably have a bounce back towards the 382 area up here, but that we'd probably continue the initial downside move here, looking for liquidity somewhere in the 7,000. And the reason I say 7,000 is just because we have our major cluster or major consolidation or accumulation really here down at 6,900 or so. So if we do end up breaking through this area, I would be looking for this major liquidity zone down here, where I think that a decent amount of people have some resting limit orders, or we'll be entering the market around this area here. And just to zoom out on the weekly to show possibly where we could get that support. We do have our 200 simple right around 7,200 or so. But honestly, I would be expecting a little bit further down, probably towards 6,900 or so. And at worst, really 6,000 would be my kind of last case for Bitcoin. If we aren't able to close really 4-hour or daily candles above the 200 simple, that would start making me a little bit worried about Bitcoin, kind of painting a little bit different of a picture than we have for the past couple months or so. But we could definitely look at that as we approach that area. So that's basically the bearish and bullish case for Bitcoin so far. Just to wrap it up, I'll just quickly run over those two cases, and we can always not do either of those and just move sideways, and Bitcoin can do really whatever it wants. But I'm just making I'm just giving some ideas so that you could kind of have a counterpoint maybe to your own argument, or maybe a supportive point to your own argument. So really, I'm kind of expecting a move down to 9,000 area. If we can hold that 9,000 area, quickly break back up to 9,600 and start getting supported by this demand line again, then I could see us moving back up into the upper 9,000 area, which maybe we can continue our ascending triangle-ish idea in that range. But until we get there, really what we're looking for is that major reaction around the 382. If we break through this 382 area here, then I would be expecting possibly a quick a little bit of a bounce around the 618 area back to the 382, but ultimately a move back towards the downside. And towards the downside, we really have a lot of open space here, so downside targets are somewhere around 69, 7,000 or so. That's really where we start seeing clusters of price action. But really past the 618 area here, we have maybe a little bit of support over here in the 7,700 area, but I don't think that will hold at all, really. I think we'll end up quickly heading back down to 7,000 or so. And upside targets, again, we need to make it up to that 9,900, 10,000 area up there. And if we can stay above there and consolidate, maybe we can move back up towards the 10.5 area. That's about it for today. If you enjoyed the video, please leave a comment. Any feedback would be appreciated. And thank you for watching. Enjoy.